As usual, before starting to see what's up, let's talk about what happened, right? And the fact is that we had a lot of jawboning coming from Fed officers late last week, and despite the years that has been for the most discouraging. I would say a lot of them favoring a rate hike and talking about the need of tightening rates and that they are getting ready. A lot of signals that the Fed is getting ready to pull the trigger, which in fact put the greenback on demand back late Friday, right? But I would like to say that the effect was much more stronger in stocks and commodities, right? We have uh, commodities prices falling, stocks plummeting worldwide, risk aversion back on, helped by some news that Korea was performing, North Korea, I mean, was performing nuclear tests. And we have the week starting with stocks plummeting, right? And and the greenback modestly higher on hopes the Fed will raise rates. In fact, yesterday we have again a lot of jawboning coming from the Fed, although they're going to begin their silent stage now because we have the meeting in next week, September 21st. So we are going to hear little from them these days until the meeting, of course. But yesterday we have one Fed member, like Lyle Brainerd, saying that the bank should not raise rates in advance, right? That there's the inflation is still low, which is true, and the timing for a rate hike has not yet come. That helps stocks recover some ground and change the sentiment towards the greenback across the board. Although we are not seeing a lot of definitions across the market, right? Uh, we had we have the Bank of England coming on this week, and for most is expected to remain on hold. But I guess the market is waiting again for the Fed next week, which, by the way, will announce its latest economic decision a few hours ahead of the Bank of Japan economic policy decision, which promises to be quite an interesting day next September 21st, 22nd for the dollar Japanese yen. Anyway, so far today we have had some data coming from, I didn't just calendar, some data coming mostly from Germany and the UK. I believe that those are the most relevant figures today. I was paying a lot of attention to the German inflation because in spite it came flat and it didn't affect much the euro. The fact is that inflation remained quite subdued. Take a look at the harmonized index monthly basis down 0.1%, right? The year-on-year readings also 0.2, 0.3, 0.4. Really, inflation is still very, very low in the euro area and even lower than what we are having in the States, right? So there are still chances that the ECB will have to do more in the nearest future, right? Uh, while again, the Fed is going in the opposite direction, and maybe they won't raise rates this September, but probably will do in December, right? So at the end, that should favor the greenback, although, well, we are going to discuss the euro in a few, but still trading boringly in a tight range. As for inflation in the UK, right, it came a slightly, let me move, okay, here we are. It came below market expectations and pretty much in line with previous month, although on a monthly basis, it advanced less than expected. Inflation in the UK, right, is expected to continue rising, particularly now that the pound is cheaper and therefore consumption is easier, okay, both for inners and outsiders in the country. So we have expectations that inflation will steadily rise in the UK. Still, I would like to remark that uh, any upcoming Bank of England decision is not based on inflation as it could be in Europe or in the US, right? The Bank of England decided to enlarge its stimulus programs in July, in August, right? Because of growth, because of economic growth. That's the main concern of the Bank of England, not inflation, right? So don't expect inflation readings in the UK to trigger uh, central bank related decisions rallies. Okay, market is trading growth figures in relation to whatever the bank will decide or may do or may not do in the future, and not inflation, right? I hope I made a point there. I guess I didn't express myself pretty well, but what I tried to say is that the Bank of England is looking for economic growth, take their decisions whether to extend this easing or not in inflation numbers. Inflation will probably keep on rising and probably came out better than this August figures in the nearest future. Anyway, the German sales survey for this September was a bit disappointing since sentiment is shrinking in the euro area. Many blame it on the bank of on the Brexit decision, right? But I do believe that it's the lack of growth that we are seeing in Europe what is hurting investment sentiment in the region, right? Uh, I'm pretty sure that the lack of economic growth we have seen is finally waving uh, on business, and that's not good news. That could put you under strong selling pressure. As usual, when we are talking about fundamental or macroeconomic readings, it's not just one number, one month that can affect the trend of a certain pair, but it's a compilation of couple of months data, right? And not just one number, but put multiple ones. So beware of that. Don't take my words literally when I'm talking about or something short term to analyze short term when I'm talking about disappointment, such in this particular case. Okay. As for today, the calendar seems pretty empty in the US. I do believe that the only thing that's really relevant would be the AP weekly crude oil stocks by the report because um, it's sort of an anticipation of what the AER report will bring us later on the week. And it could really affect oil prices and therefore put some pressure or favor some rallies in the greenback. Okay,